Hello guys, hello. So I welcome you to this video. I welcome you to this session. Alright, so in this particular video, what I want to talk about is I want to take you through a rundown of what inspired my analysis on German 40. So this is actually a trade breakdown on German 40, and I want to be telling you the exact reason and what I actually saw that inspired this analysis on German 40. So basically, we'll be moving from expectation to execution, right? So, as a trader, what you need is that you need to understand, you need to know what you are expecting in the market, right? For instance, you are saying that this is what I want to see price do so that I will be able to do this, right? So you are moving from a place of expectation to a place of what? Execution. You will tell yourself that if you don't see price do ABC, then you are not going to be doing XYZ. That means if price does ABC, then you are going to be doing XYZ, right? So that ABC is your place of expectation, while the XYZ is your place of execution, right? So they are equal in direction. Are you getting it now? So basically, you know what I trade is structure, liquidity, and key level. Structure, liquidity, and key level. Before your structure, liquidity, and key level comes in, first of all, what you need to understand is you need to understand basically I narrow this into two things, but they are actually three things. As a trader, you need to understand bias. Number two, you need to understand entries. Then number three, you need to understand risk management. But in this video, we'll not be talking about risk management, right? So I will be talking about the first two, which is bias and what entry, right? So once you understand the bias of the market, you're now framing um, your the system you trade into that particular direction, into the bias that you have already built, or the direction you've already built on, right? You're now framing your system, the system that you trade into that. So once you understand this, you need to understand also that bias is about 70 to 80%. It does 70 to 80% of the work, while your entry does about 30 to 20% of the work. So most of the time you will get your bias correct, but the place you are going to enter from your entry, right, is going to be a very very big deal, right? So if you're able to understand bias and entries, you most likely be advantaged, right, in the market, right? So looking at German 40, what actually happened on German 40. So I will just rush on what happened on the previous day before my analysis on German 40, what actually happened. So looking at the line charts on German 40, sorry, it's midnight, and I'm not I'm trying not to wake others, right? So looking at what happened on German 40, sorry for that, please. Looking at what happened on German 40, what we saw here on German 40 was a breakout on the daily time frame, right? We saw a breakout on German 40 on the daily time frame, right? And looking at German 40 also, after that breakout, I established that price was gonna go take out this particular external range liquidity, right? So my idea was I was waiting for price to right? I've already built my direction. I already know price is actually bullish, right? Because price broke this particular level. Price broke it to the upside, right? And even looking at what price is printing, it's a bullish structure. Price is printing what? Bullish structure. So price broke above that level, right? And created a CRT candle. I'm trying to I'm trying not to make this video long, right? I would have talked about what actually happened in this particular place, but let's just forget about that for now, right? So what price created here was a CRT candle. What did price do? Price swept the low of this particular CRT candle, right? Where is the high of the CRT candle? The high of the CRT candle was this particular high here. This was the high of the CRT candle. Price tapped into a key level here, which is an open close key level, right? So from the daily time frame, what we saw previously on the previous day was that price tapped into this key level, and what we saw, you know what CRT always does. Whenever you see a CRT candle, you expect price to come back to this V-shaped key level, right? Then our target will be CRT high. So if we go down to the lower time frame, we'll see what price did. Because whenever you already understand that whenever we see a CRT candle, if it is on the daily time frame, we see a CRT candle on the daily time frame, the 4 hours breakout or break of structure is going to confirm that what that CRT candle is going to hold. If we are actually bullish or it's a bullish CRT candle, whenever you see a CRT candle on the daily time frame, the 4 hours breakout or the 4 hours break of structure is going to confirm that that CRT candle or that CRT pattern is going to hold. So what did we see here? What did we see here? So after price gave that CRT candle, 4 hours give a breakout. 4 hours give, a break of structure at this particular level here. This particular level acted as the break of structure. So daily CRT, right? 4 hours break of structure. This has confirmed to us that price is what now very, very bullish. So price actually reacted from a V-shaped key level here that was previously used and is now what disrespected. Price cleared out this or used this as internal liquidity, tapped into that V-shaped key level, and all we saw price did was what? Price gave another breakout at this particular level. So sorry for that. I would have explained what happened on the lower time frame, but that's not what I want to explain. But I just want to build from somewhere. That's why I'm still talking about this. Price tapped into this level, and what we saw price did was targeting, was go take out the CRT high. That was the first target we had, right, on German 40, right? So that was the first trade on German 40. So coming on to the chart yesterday, I saw that this high was still standing. This particular high was still standing, and I've already established my bias on the daily time frame that price is actually going to take out this high since we are what bullish, and now price has already taken out this daily CRT high, but our daily high is still standing, right? So looking at that, I already knew that what price is going to go take out that high, and that is going to be my new target on German 40, right? Let's clear this out. Let's clear this out. So I started building my bias. I already know what my bias is. My bias is bullish, right? I already have a bullish bias. So what I did was that if you go to the daily time frame, you look left, let's clear this out. If you look left, what I saw was that I saw price reacting from this particular key level. So you need to understand that disrespected key levels, bullish open close key levels is actually used for buys, right? So it's used for buys until it is proven otherwise. What do we mean by proven otherwise? If you look at this particular bullish open close here, you see that it was previously used for buys. Price now disrespected it at this particular level here. It was used for buys. Price disrespected it at this particular level, right? It came back to this particular level and was used for sales. Are you getting it now? It was used for sales. Price disrespected it multiple times. One, two, three, four, five. And it came back to this level. And what I saw was that price was rejecting or reacting from this particular bullish open close that has been disrespected multiple times. So this particular key level still holds much more value in the market. It could still be used for buys and it could also still be used for sales. Are you getting it? So what I saw was price was reacting from this particular daily bullish open close key level that has been previously used and disrespected multiple times, right? So I went on to my 4 hours time frame. I went on to my 4 hours time frame, and what I saw was that I saw something from this 4 hours time frame. I used this particular level as a break. I used this particular level as a break, right? As a break. Why this level was acting as my internal liquidity. I was using this level as my internal liquidity. So you need to understand that price is interested in doing just two things. What is these two things that price is interested in doing? Number one, price is interested in what? Attacking liquidity. And number two, price is interested in what? Rebalancing and holding balance. So what do you see here? This level was acting as my internal liquidity, right? It was acting as my internal liquidity. Another thing you need to know or take note is that there was an imbalance here. There was an imbalance in between this third candle, this first candle, and this third candle. There was an imbalance here. So that was where I was actually framing my bias, my should I say my level from the key level. This is called a plug. This is my personal plug and play level, plug and play key level. So what I saw was that there was an imbalance, and I knew what price was actually interested in doing. I knew price was interested in doing just two things. Number one, attacking liquidity. I've already known where my liquidity is. This is the liquidity, right? So the next thing for me to understand is where is price most likely going to react from? Which key level is going to reverse price to go take out my external liquidity since I've already built my bias, right? So I now understood that since I have an imbalance in between this particular level, then price is most likely going to respect a key level that is inside this imbalance. So what did I do? I saw this particular V-shaped key level, but I actually didn't use it. I used this particular open close key level. This was the key level I used. I used this particular key level. I used that particular key level. And what I did was that I went to my 2 hours and 1 hour to confirm something. When I came to the 2 hours, I saw that that particular 4 hours open close key level I used sponsored some buys and some little sales and has been disrespected multiple times in the market. So I knew that that particular level was a valid plug and play key level for me, right? So most of the time your plug and play level must it's not a must for your plug and play level to be inside of an imbalance. Most of the time it might not be inside of an imbalance, but it will still hold price and reverse price to the opposite direction, right? So immediately I saw price tapped into my level on the 4 hours time frame. What did I tell you that we are going to be looking out for? Whenever price taps into our 4 hours, since our daily we've built our daily bias and now price has tapped into our 4 hours key level, right? So what we want to do is not as if you cannot enter directly, right? Price actually presented a direct entry from this particular level for us. It's presented a direct entry, so I would have just did something like this. My entry would have been at that particular level, SL maybe at this low here, right? So at this particular low here, then take profit will just be at this particular overall high. This would have given me a 7RR trade, 7RR, right? So this would have been a very, very wonderful trade. Are you getting it now? But another thing, this was the direct entry. Are you getting it now? So this was the direct entry. Then to get my confirmation entry, what I was looking out for was a breakout. Since price had already reacted from the 4 hours key level, I was looking out for a breakout. Price is reacting currently from the 4 hours key level. You move one time frame or two time frame lower to look for your confirmation entry. So going down to my 1 hour, what I saw was that price presented to me a 1 hour breakout, right? So I saw price presented to me my breakout here. This was a breakout price gave. Price gave a breakout on the 4 hours. So for me to actually confirm this breakout, I went down one time frame lower to my 30 minutes and I saw that price used this level was actually acting as an internal liquidity for me, right? So now, why did I miss this particular trade? So this particular level sponsored some sales, right? I was actually thinking price was going to come back to this level. This level sponsored some sales. So I was thinking price would come back to this level, but it was actually a missed trade. Now, you could see price actually missed my confirmation entry, then went on to what go take out the external liquidity. So now I want to explain why this was a missed entry and the mistake I actually made. So when price actually tapped into when price actually broke out from my 1 hour, if you could see what price actually did, you could see that what price did was that instead of price tapping me almost immediately and going on to go take out the external, what price did was that price actually moved up. Are you getting it? To go take out um this liquidity here, price actually moved a little bit higher to go take out this before it came back. So price coming back, instead of me to still look out for, like, I should have gone to my 4 hours and go check out for something, right? Go check out for the right key level to use, right? So if you go back to the 4 hours, you'd see what price did. Price presented to me a breakout. Let me clear this. Price presented to me, you could see two consecutive bullish candle to the downside, right? Gives to us or presented to us a bullish or what's it called, key level. Two consecutive bearish candle to the downside will give to us what, a bearish key level, right? We are going to be using this particular key levels for sales. It's supposed to be used for sales, But I told you when it is proven otherwise, it's going to be used for buys. So looking at it now, this particular bullish candle here proved this bearish, two consecutive bearish candle to the downside. It proved it otherwise, right? So this particular candle gave to us a breakout of this level. This was a level here, right? So this particular bullish candle presented to us a breakout. So you could see that was the exact place price rejected from and what reversed to go take out external. So where I would most likely be interested in was that I wasn't, if I had gone to my 4 hours time frame, I wouldn't have even taken the trade from this particular level, because I'm most likely interested in levels that has been disrespected multiple times in the market. So if you look at this particular level, you see that this particular A-shaped key level sponsored a little bit of buys, yeah, and has been disrespected multiple times, yeah. So this would have been my entry, right? So this was the particular mistake I made. So this would have been my entry. This would have been my entry from this particular level. Then stop loss. Stop loss would have been at this particular level here. My take profit would have been here, something like this. Stop loss would have been this particular level. My take profit would have been this particular high. So that's actually that was the little mistake I made. You could see price didn't even have to return back to the 1 hour breakout, right? Price didn't have to return back to the 1 hour breakout. Where price actually used was the 4 hours key level. So you could see this is as simple as you can ever imagine. This is a very simple breakdown. So all I want from you is to watch this video, try to backtest the little things I taught you on this video, and you're gonna do great things. You're gonna do big numbers with this knowledge, right? So I'll be dropping my WhatsApp link on the description box, so make sure to click and join us on my Telegram channel link, right? So make sure to click and join. I'll be waiting for you on the inside. So see you guys on the next video. Bye bye guys, take care.